Hello guys, I go by the name of Amar, aka Ammarullah, as you all know me. It's been a while. So guys, in this video I'm going to show you the breakdown of these particular trades. 1, 2, 3, 4, 5, 6, 7. I'm going to be breaking them down step by step of how they show how you can catch trades like this. Let me apologize in advance. This video is going to be kind of long, maybe, yes, because I am going to explain it very clearly and well, So with that being said, let's go straight to the video, right? Let me delete everything and start it fresh, right? As you can see, this particular time frame is 2 hours time frame. So if we are starting analysis, we always start with top down analysis. You already know, and I believe you know what is top down analysis. Top down analysis is starting analysis from a higher time frame and come down to the lower time frame. So if you can see, this is monthly time frame. We just go outside of 2 hour time frame and come to monthly time frame. You can see the structure of this market is clearly bullish from here to there to up here, but after this high the market starts dropping down and turn bearish from here. A lower time frame, you see a multiple of bearish structures, right? You will see multiple of bearish structures because higher time frame is already trying to turn bearish. So this is the last low we had on the higher time frame. Then during the month of last 2 months, that will be June, this particular candle came down and take out this low. If you can see, that is what we have, right? The breakdown of those trades, all those trades were been taken during the month of July. I mean, they were all during the month of July. After June, take out this particular low that is right here, if you can see. So what do we have here? This low is been taken out. Sorry, I need to mark something. And after this low is been taken out, then during July, when June candle closed, during July, this particular candle was formed, and until when July is done, we are done with July, the market did not balance this particular area, which made this particular zone a fair value gap. Everybody know a fair value gap when 3 candles form and the one at the middle is not being repriced. Price did not balance it from the low of the first candle to the high of the third candle. The second candle will leave a gap, a space just like this one. So this is the gap we have on our monthly time frame. So we will be expecting the market in the future to come back and rebalance it, right? So we have this level, we had this level in mind as a fair value gap, right? So going back to lower time frame, lower than the monthly, which is weekly time frame, going down to weekly time frame, you'll clearly see the structure more clearly. You'll see the structure more clearly, right? So this high formed this low, then this low formed this high, this high formed this low again, swept this one, then this low formed this high. Now this high made this low that swept this particular low, a lower low. So we expect after this low, we put it in the back of our mind. Now the market will possibly reverse back into where? Into the fair value gap that was been left on the monthly time frame, right? So having that in back of our mind, we will still go down to the lower time frame and check the structure, which is daily time frame, sorry, to see what is daily showing us. Daily did not have anything after this sweep. Then the daily time frame only had all this, right? So after this low has been, we are analyzing those trades we have been taking before, after this place. It was after this particular, you should check at the date. The date is June, right? So those trades we have been taking during the month of July from here. So it was all after this low, this lows, this one, this was the last low. Then the trade started from here, all this place. So this is our focus point. So we sweep this, the price came back, and then sweep it again, right? So on 4-hour time frame, what do we have? On 4-hour time frame, you can clearly see after the sweep, multiple sweep, one break, then another break. What do we have? We have this particular last low, right? This last low. This was the last low that was being formed after this sweep. Then the market came down and sweep it again, which is liquidity sweep, right? And form this high. This low now form this high. The low after this high then form this low. This low failed to reach this high, this low, which make this low now a strong low. This is a strong low because this high made this low, and this low failed to sweep this one now. It failed, then make this high that is higher than this particular one. So this automatically, this is a break of structure, and this low now automatically turned to a strong low. From there, we will expect reversal. So seeing that, this is how I got the first entry that was being shown on the 2-hour time frame, right? On the 2-hour time frame is where the first trade was taken. After seeing this at the 4-hour time frame, this liquidity swept liquidity, then made this high, failure swing, this low fell to reach this one, then it breaks structure. The break of structure, first reversal is an inducement. After first retracement after a break of structure, if the reversal failed to reach the 50% of the range that breaks structure, or even if it reached the 50%, it failed to reach the point of interest, the main point of interest, that will be an inducement level. An inducement level, right? The market will likely come back and reprice it. So making that, then this turn to our first area of demand. This is our first area of demand on the 2-hour time frame. All the analysis will be done and finished on 2-hour time frame. We are not going anything lower. Even if we are to go lower, we will just go to 30 minutes time frame and maybe get more confirmation without executing a trade, without showing you how the trade has been made, right? Before showing you how the trade has been made. So let's go to 30 minutes time frame. I need to show you something before that liquidity sweep, or let me say after the liquidity sweep, before the break of structure. You will see on lower time frame or lower than the 2-hour time frame, there is still more opportunity of entries. There are opportunities of entry without even waiting for for the higher time frame to like present more reasons to enter. All right, you will still get another more entry opportunities on the lowest time frame. So here is it. This is what I mean. After that liquidity sweep of higher time frame, we had this low, this high. This is a high on this time particular time frame, lower time frame, right? So the market sweep liquidity and first break. This is our first break now. First break, reversal, first retracement, which is an inducement. Then the market sell down to this particular level. That is where the first entry has been executed. And where will be the target? The target will be next structural area, that is this high. And then after taking profit, the market breaks structure, first retracement is an inducement. You should always remember that. After the inducement, it fell to reach the main demand zone, which is down here, that I just drew on the 2-hour time frame. Let me even do the breakdown on 30 minutes time frame. It's almost the same. You can analyze that 2-hour time frame and get confirmation on 30 minutes time frame, or 1-hour time frame and get confirmation on 15 minutes of the same 30 minutes time frame. So let me finish the analysis on this time frame. So after that, after taking the profit, it breaks structure again, then keep breaking structures without rebalancing it. So we will keep in the back of our mind that the market will likely come back later and come and reprice it, right? So first another break of structure, another break of structure, nothing, then another final break of structure. We had this break of structure now. After this break of structure, we are expecting the market now to continue breaking upward, but it failed now. It left this particular, after this break, it left this particular this particular candle now that we expect the market to respect, to come back to after it tap it to go up, but it failed. As it come, it just go below it, and this last bearish candle too is something to consider. It failed the first time, then after this break is come, it failed again. It go below, it passed through it, right? After it passed through it, then now this particular level is now a, then it do what it change character right here. This low now has been broken. The structure now has automatically turned to, is trying to turn to downtrend, right, to reach that area of demand that is down here. So seeing that, this high now automatically become a protected high, a high that is not expected to be taken out anytime soon. After the break, first retracement, I always tell you, is an inducement, which is this particular level. Break, first retracement, inducement. After it made this first retracement as an inducement, it failed to reach this reversal, failed to reach to sweep the inducement and made this low again. So now anything that will come above this place is the liquidity sweep, which is this place, this particular place. So now this candle, this particular level now, this particular level is our next area of interest. Why? Because this is our next breaker block after this sweep. After this sweep, this change of character, after this character has been changed, we had this other what do you call it? Breaker block. So that would be our next, that would be the next area point of interest, right? Stop loss should be above the protected high, and target for take profit we target this level, this particular level. Why? Because it's the next liquidity zone, liquidity point, right? We are expecting the market normally to come back and take it out. So after the market take it out, after the market take that out and hit take profit, it will likely reverse back to reprice some levels. Where are those levels? First, we had this break. After this break, the first retracement is an inducement, as you all know. It is this particular level. It's an inducement. So anything that will go above it is a liquidity sweep. It will sweep out the inducement level. So after the sweep, then we had this particular order block. The price came back. This is order block type 2, which is not, it will be a level that is inside a range. You see an opposite candle, opposite color of candle. Maybe if you are bearish, if the market is dropping down, you will see a green candle in the middle of that drop. If the market is rallying up, you will see the opposite color of the candle in the middle of a range. So that particular thing too is an order block, that particular candle. So that is what happened here. If I'm to go to 2-hour time frame, you see a single bullish candle right here. So that is our next entry. That's the only thing, that's the closest thing we see after the inducement has been taken out. So that is our next, that will be our next entry. And for target, we'll be targeting this low that has just been created. So boom, it came and take it out. Then now we have another break of structure. The market is still yet to reach the main point of interest, this area of demand, right? So after I sweep it, it came back. This is now our first inducement. Then we had this particular level, this particular zone. Multiple candle and multiple last candles can still be an order block, right? Last, always in a downtrend, last up closure candle is an order block before a drop, right? Before a drop or before a break of structure. So there may be two at a particular place, or multiple, maybe more than two. So if there are more than two, sometimes if there are two or more, all the two can be an order block. That is what we call multiple candle order block, right? So that is what happened here. That is what happened right here. And it happened above this particular level. This is an inducement level too. Why? Because after hitting this, the market rallied down first, then went up, it formed this low, then the low has been swept. Another break of structure, internal break of structure. Then this is the first reversal after this break. So that is automatically an inducement level too. Then the market came back and take it out and reached the multiple candle, serving as an order block. So that is the fourth entry. How many do we have now? 1 up, 1 buy, 3 sells. Remain 3. So now, as the market take profit here, reach the take profit here, it automatically reached our main area of demand that we had in our higher time frame level. After this sweep, the market, don't forget I told you the market had this break of structure, this first inducement, first reversal as an inducement, and it left this area of demand. So now the market reached the area of demand. What we will be expecting the market to do is to turn direction to the upside, which it did. It tapped it, made this high, then came back and swept this low as a liquidity sweep. So now after I swept this liquidity, we are not expecting the market to come down lower than this low, because this is now automatically a protected low and a strong low, you can call it. Then now this high, after making this low made a high that take out this one, which is a change of character or market structure shift, anything you call it. After the shift, then first retracement as an inducement, then the market came down below the inducement level to where this particular level. Now we have a inversion fair value gap as our entry here. We had an inversion fair value gap, which is an IFBG. After the sweep of inducement, it reached the inversion fair value gap. So that is how we got our next entry. For stop loss, it will be lower below this protected low, and take profit. Where are we taking our profit? We will be taking profit at this next high, the high that was made this high, the recent high. This is the most recent high. This is another one. This is where we take full take profit, right? This is where we take full take profit. This is where how I did it. So now after taking this profit, the market, if you can see, the market always, when a high or a low has been taken out, the market will likely come back and reprice the level that made the structure shift, like that take out the structure, right? So after this high now has been taken out, then we had this particular new high now. Then the market made this high, came down, then went above it. Now we had another liquidity, another block of structure. So now the structure did not hold, because we will be expecting the market to react from a level here or somewhere around here, but it failed. It swept it out. If you can see, it swept the level out. So as it swept the level out, now that particular level that we expect the market to react to now turn to our next area of interest automatically, right? It turned to our area of interest. We are interested on that area to sell, since now the market has changed character again. Instead of it to continue pushing up, it failed. It refused, because maybe it wanted to price something down there. So now we had another market structure shift to the downside, if you can see. So after the market structure shift to the downside, first retracement as an inducement level, market sell down, then it's take out the inducement level now to reprice that particular level that I tell you is our next point of interest, if you can see, which is now we are going another short again. Stop loss above the point of interest, just couple pips above the point of interest. Take profits at the next most recent low, since we are going short, we are selling. So then it break another structure again and reach, if you can see, now it moved up with forcefully without repricing anything here. After this break, there is nothing that repriced back to this, to that particular level after the break. So after this break, first retracement as an inducement level as usual. You already know that. First retracement as an inducement. Then anything that will come after it will be the next point of entry, which is this particular level of order block. So this is the next entry. Bam, to buy up again. But I don't think this is among the ones I shared. This particular level, I did not enter it. I wait for more confirmation. It is not marked as my entry. Then we had this break as a more confirmation. After tapping it, then it swept up. It went up. Then first retracement as an inducement level. Incomplete pullback, which is an incomplete pullback. Then the second one as an entry. As the entry, where are we going to enter this market? As this fair value gap. The market failed to reach the main fair value gap at the first retracement, then swipe up and sell down again and tap it up again and tap it more. It has been tapped 2 times. So this is how we got the final entry, and stop loss will be below this low. This low now is a protected low because this low pushed the market and made this high that break a structure, right? So we are safe to place our stop loss here. And for targets now, since we already tap the main area of demand that we had in a higher time frame, so we can boldly target that level of our monthly, the monthly level, which is that particular fair value gap below of it. That is our main target now. So that was how I targeted this. I'll stop low below the low, below this low, and as you can see, it was a successful trade. All of them went successfully. All the 7 trades. 1, 2, 3, 4, 5, 6, 7, as I showed you before starting the analysis. So that was how the trades has been gotten all in one. So thanks for watching. I just hope you learned something today. I told you the video will be long, and we had almost 28-minute video. Sorry for my explanations of some things, I know on some things my tongues will be like kind of talking, English is not my mother's language. We are just trying to borrow a language that is not ours, so at least we try. So thanks for watching. Make sure you subscribe for more things to come, right? Bye.